it seems quite rare that in a country like South Korea, there would be a martial law declaration. And so as the night progressed, I had there was also a sense then of encouragement, around the fact that the Korean system was able to respond quite quickly. All the institutions showed quite significant resilience, and there was a sort of widespread agreement across the political spectrum against the decision for the martial law declaration. And so from a ratings perspective, this very swift reaction gave a bit of confidence that Korea's institutions have sufficient guardrails to manage some of these institutional risks. So the immediate implications, we think, are relatively limited. We don't think that the actions from last week will have kind of a durable and lasting impact on Korea's institutional quality, on Korea's economic growth outlook, and certainly on the robust external finances that Korea has. I think what we'll be watching, though, is how long this political crisis persists. If it does prove to be quite protracted over a long period of time, that could lead us to think about how this impacts our perception of Korea's institutions, how the impact that it might have on Korea's economic growth outcomes, and I think quite importantly, the impact that it would perhaps have on Korea's fiscal management, which is an important consideration for our sovereign rating. Be watching, how protracted this crisis proves and kind of what the more material and long-lasting impacts of the crisis are. If this leads to kind of a sustained and a worsening of the political gridlock and political divisions in Korea, that could influence our perceptions more medium term over the ability for Korea to move forward its policymaking effectiveness around fiscal management. That's not our base case. Our base case is that this is resolved in a manner that is consistent largely with the constitutional process, and that the current political crisis causes some temporary disruptions to economic growth, but nothing that is long-lasting and fundamental to the sovereign rating. If we look at the downward rating sensitivities, these focus on, firstly, the outlook for public finances. We've seen an increase in deficit and debt levels since the pandemic started in 2020. And so this has eroded over the past couple of years a bit of Korea's fiscal strengths. And so one negative sensitivity is that if we see over the medium term continued large fiscal deficits that lead to a much faster increase in the pace of debt accumulation over the medium term. So I think that's one factor that we're watching in particular when it comes to some of these political developments. What happens on the fiscal side will be a factor for our rating. And so our expectation is that the status quo kind of persists and won't have an impact on the rating in the near term. Political volatility in Korea is not particularly abnormal, although, of course, a martial law declaration does stand out, of course, as quite a serious event. But that being said, I think the fact that South Korea has constitutional norms and frameworks for managing some of these political challenges is something that helps to underpin, in this instance, a sovereign rating during even a political crisis that leads to impeachment of a president. Compared to the last impeachment, I suppose some of Korea's credit metrics are slightly weaker than they were before, particularly on the public finance side. Deficits and debt ratios are on the higher side now than they were back in 2016. But if we look at other factors, Korea's robust economic growth, its very strong industries, those factors hold, even though in the near term there may be some challenges for growth coming from trade tensions globally. And finally, external finance strengths. Korea has a high current account surplus, has very strong foreign exchange reserves, and those things provide a very strong buffer even amid some of these political tensions. I think the impact of that has faded. Again, going back to this idea of Korean institutions proving their resilience, I think foreign investors recognized that Korean institutions held up quite well amid this political volatility, and that gave them more confidence in Korea's ability to manage the current situation. And we've seen a lot of support coming from Bank of Korea, Ministry of Economy and Finance, to help manage some of the initial volatility in financial markets that came about. And so that, I think, also gave foreign investors more confidence. And so I think we are seeing stabilization, and that's reflective of, these institutional strengths that we see in Korea.